Now, Don Luskin, you know, sometimes politics can really throw sand in the gears. What do you make of this story?
Well, you're right. It's a war on prosperity. And so far, it's just a war of words. I don't think it's really in the Democratic Party's interest to actually vote bills like this out of Congress. I don't really think it's going to happen. If it does, I think Bush is going to veto it. It's in the Democrats' interest to humiliate Bush about Iraq, to humiliate Bush about corruption. It's really not about taxes this particular year. I think this is going to go away. But as you say, the uncertainty is very bad for stocks.
Don, as we come towards the end of the second quarter, and I guess stocks are up about 8% for the entire first half. Heck of a good performance.
Yep.
You've been on the bull side of this story, to your great credit. How do you play this story? You got to juggle earnings on the one side, maybe a little better looking economy also. Meanwhile, the bad politics on the other. From an investment strategy standpoint, Don, what does one do?
I think you still play the bull side of it. The earnings story looks great. The economy is reaccelerating. It doesn't scare me to have long-term interest rates as high as they are. But, you know, the one thing you've got to admit, though, Larry, you and I have both been talking correctly for a couple of years about the deep equity risk premium, the great bargain that stocks are because of their big earnings yield versus the poor income yield of bonds. Well, with stocks trading near all-time highs and bond yields now up to 5-year highs, a lot of that gap has closed. We used to be able to say that stocks are as much as 50% undervalued. Today, the most I can say is that they're 20% undervalued. Now, that's a lot. 20% undervalued is a lot. That's more than they were after the crash of 1987. But it ain't 50%. So some of that cushion isn't there. We might be seeing more equity volatility here as we move higher and higher and higher.
Yeah, that's stocks are just not as undervalued as they were. No question.
Right.
Good point. How much trouble is Bear Stearns in your view? And if they are in trouble, are they a takeover candidate? Will they be sold?
I can't answer the second question. Clearly, we're in an environment where anybody that has problems is suddenly a takeover candidate, part of the sort of fantasy that's going on with private equity. But you know, it is a game of confidence, and I don't mean that in a kind of facetious way, but relationships, credit relationships, do depend on people being confident in their counterparties. If you get an issue where people start to doubt that, they start to doubt whether people have the resources, you know, it has an easy ability to spread. You could end up with Contagionville.
Craig Columbus,
hey, Larry, may I interject? Think what a wonderful world it is where a company gets in big trouble and the worst thing that happens is it gets taken over. We used to worry about things like bankruptcy. There's so much darn money in the world. You get in trouble today, somebody just buys you.
Yeah, well, it's not the worst thing in the world. I agree with that.
That's right.
I was scanning, even in a lousy week, the best performers, materials, tech, and industrials. That's kind of your bailiwick. Are you still there?
Yeah, I still am. I'd throw energy in there, too. But if you've got $100,000 to invest and you want the stock and you want to really get a great return on it, here's what you do. You turn that into small, unmarked bills. You put it in a briefcase. You go to Central Park at midnight and you give it to Chuck Schumer, and all this tax stuff goes away.
That's how unkind, how cruel, how absolutely cruel.
Not me.
This is
Yeah,
great
that was
stuff.
a very broad overgeneralization.